Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Now we're going to talk about something that many small business owners dread talking about, and that's paying their bills. The fancy accounting term for this is accounts payable. It's a topic that might cause sleepless nights. However, it really should not have to be so stressful. So today I'm going to provide you with some ideas of how to make it less stressful. All businesses have ongoing costs to keep them running. So you just need to employ some key strategies to make sure you are managing your payments and accounts wisely. Good accounts payable management is critical for the health of your business. To keep a better handle on your accounts payable, I have a few key strategies to help you along. Strategy number 1, document then follow a payment process. Ensure that you have invoices and records for all payments due and create a system whereby invoices are reviewed and approved before payments are approved and processed. Then establish and document clear procedures for payment and train all of your employees on these processes. Now, in my practice, we recommend a lot of our clients use a service called bill.com. And the reason I really like bill.com is it provides a framework for you to handle paying your bills. And what I mean by a framework is it requires you to, first of all, upload a copy of the invoice. Once you upload a copy of that invoice, then you assign an approver to it. Once you assign that approver to it, the approver then approves that invoice. Once the invoice is approved, then there is a payment created. Now, why is all that important? It's all about putting together a program for handling your bills. And if you've got this type of program established, and it doesn't have to be with bill.com, you can do it, a whole lot of ways. I have some clients that, they put all their bills to be paid in a folder, and then every Thursday of the week, they get out that folder and they go through them. But it's something that if you have a process, you'll find to be very useful. So strategy number 2 is to plan ahead by creating a payment schedule and aging report. It may be a good idea to create a regular payment schedule so that processing checks is done on a specific day rather than on an ongoing ad hoc basis. In addition, creating a detailed aging report can help to ensure that you don't get caught off guard with an invoice coming due for more than you will have available in cash. Now, this is really important. And I find that this is an area where a lot of clients struggle. And I think it makes sense, like I talked about in the first strategy, is to have a particular day that's set aside as, okay, this is my day to pay bills. That way, it doesn't become a sideline during the week. So if someone calls you from a particular vendor and says, hey, Ralph, I need a check for this. You can simply say to them, listen, that's great. We do all of our bill payments on Thursdays. So our bills are approved and the checks are cut on Thursday. So you can expect to get your check, Monday or Tuesday of the following week. Or if they have some sort of electronic payment method, they might be able to get paid sooner. But it really creates a program for that. And the other thing we talked about here was an aging report. And that is a way to look at what's coming due. And where this becomes an issue is making sure that you use some kind of software, like talked about bill.com. But in addition to bill.com, you might want to look at QuickBooks or QuickBooks Online that basically requests you to put the bill in as they come in. And then you take a look and say, okay, well, this week I've got to pay these bills, but then I see on the calendar next week I've got to pay these bills. So it allows you to match up your cash flows with the upcoming bills. Strategy number 3, safeguard your accounts. Employee fraud can happen to any business, and accounts payable process is particularly vulnerable. Avoid this problem by limiting and overseeing the vendor management process as well as separating the responsibilities for employees for approving and paying invoices. Also, carefully manage and monitor employees who have the ability to access bank accounts and make payments. What we talk about here in the accounting lingo is separation of duties. Now, that sounds great if you've got a really big organization where you can have one person does this job and another person does that job. But I know from personal experience that you can't always do that. But that being said, as the business owner, there are ways to safeguard this. And those ways would be having a formal approval process. Having the person that creates the check not sign the check. So, and a lot of my small business clients, they might have a secretary or an accounts payable person that does that job maybe one day a week. And they'll present the client with here's the bill, here's the check I created. And at that point, the client can look at the bill and say, okay, well, look, this is like a plumbing bill, and it looks like we need to pay $200. And it looks like the check is written out for $200, and the check's made payable to the plumbing company, and there's a date. So you can look at these and verify these things. And that's very important. And also that whole idea of safeguarding the business account. So the person that's creating the check should not necessarily have access to the bank account. And where does that become a problem? Well, you could have somebody that's drafting checks and then going right into the bank and redirecting those funds. I've dealt with situations like that when I was working early in my career where there was fraud being done, and that's what was done. It was done through the accounts payable process. So it's something you really need to keep an eye on, and it's an area that with due diligence and paying attention to what's going on, you can look and see, do these things make sense? Strategy number 4, get outside help to avoid bookkeeping mistakes and find any irregularities. Well, that's where my firm comes in. You should have an outside bookkeeping professional or accountant who can regularly review your books for mistakes or irregularities. That's a tough one. This person or team should be separate from those approving and making your payments. What we do as a firm, in a lot of cases, is the client runs their day-to-day business, but then we come on alongside of them at the end of the month and we'll do the bank reconciliation and make sure that all of the transactions that are clear in the bank account are transactions that the owner approved. We'll take a look at the checks. We'll see who the checks are made payable to. We'll make sure that deposits are being made. We'll do all the things that try to prevent those irregularities so that we can assure the customer or the client that there's no problems in the accounts payable process. Because I'm going to tell you right now, when I deal with fraud investigations, generally this is where it starts. A great one comes to mind. I did some work with a Christian camp that's located downstate of Delaware. And I asked the board of directors, they came to me and said, listen, we've had a problem with our treasurer. The treasurer has apparently been stealing money and we need somebody to come in and investigate this. And I said, okay, that's fine. So I asked the members of the board, I said, guys, who looks at the books and who looks at the checks and the bank statements? And they said, well, the treasurer handles that. I said, okay, well, who else looks at it? And they said, well, we don't really get involved in that. So here's a great example of lack of separation of duties. So when I went and looked at the books, you will laugh when you hear this story. I went and looked at the books, and the treasurer, he was having a hard time. I think he wanted to get caught. That's another thing, and I'll talk about that in another broadcast in the future. I really believe these people want to get caught. But anyway, I start taking a look at the checks, and he had written checks to himself. And in the memo line says, I am taking money. In memo line says, borrowing money from the camp. And at some point, I don't remember exactly how he worded it, but it's like, I'm stealing money. So all someone had to do at the board level was to open up the bank statement, take a look at the statement, and take a look at the checks and go, wow, this guy is obviously got a problem. But see, that's the problem. We assume that, good old Joe, the bookkeeper, is going to handle everything. We give him all the responsibility. We give him all the access to everything, but then there's no verification. So you need to take a look at what's going on in your business. I hope these tips for accounts payable are going to help you be more successful.
You've been listening to Ask Ralph, brought to you by Sazio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Sagio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.